It's about that time of day again. My name is Joseph. Thursday evening, June 21st. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. My plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's session. Tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude is bullish and back inside the range from last night's newsletter. Funny how that happened here today. So my plan remains the same. Let's keep fading those breakouts using failure patterns and the two-try rule tomorrow morning. The S&P is bearish with a spike in range pattern as well, and that tells me to look for selling opportunities up at the range highs, and I'm focusing on buyer failures up at resistance tomorrow morning. The Nasdaq is bearish with either a spike in range or maybe a spike in channel tonight, and the next few hours of price action is going to tell me exactly which one we get. Gold is bullish, headed back into the range from earlier this week, and my plan is to use a key hidden channel support level for buying opportunities tomorrow morning. The euro is range bound and up at the high of the range, so my plan is to look for selling opportunities using the two-try rule with a target back down to that range low on Friday morning. Well, ready to wrap up what's been an incredible week of trading opportunities. Tomorrow is a summertime Friday session, which means the window of opportunity is much smaller tomorrow. And with trading ranges on the chart tonight, my focus is going to be to keep fading those breakouts using failure patterns tomorrow morning. As always, no matter how small the window of opportunity is tomorrow morning, we'll get a great newsletter in store for you guys and gals tonight. I got plenty of reliable opportunities for tomorrow's Summer Friday session. We're going to jump into those charts in just a few moments, though. Before I jump into charts, though, I do want to remind you, if you're watching me on the YouTube channel this evening, you can find a detailed description of this entire trading strategy written out on my blog right here at sidewaysmarkets.com. I'll leave the link in the description of this video. Also, if you have any questions about anything covered in this video tonight, don't forget you can post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit that bell icon so you get notified every time I post another video. And if you really want to stay in tune with everything we do here at School of Trade, head over here to sidewaysmarkets.com. This is where all the action happens every day, and make sure you join our mailing list. I'll put a link in the description of the YouTube video. Follow that link. Come back here to the blog at Sideways Markets and join our mailing list. Give me your name and your email address, and I'll send you an email every evening when our nightly newsletter goes live. Also, don't forget, follow me on social. Lower left-hand corner, I'm always posting charts, links, videos, quotes, all kinds of great stuff on my social media channels. If you're hanging out on social, right, and you enjoy this newsletter, you'll really enjoy following me on social. Grab that in the lower left-hand corner. And then don't forget about those charts. All the charts from tonight's video, that's right, have them ready on your computer for tomorrow. How easy is that? All the charts ready for you to download and have those ready for tomorrow. Grab those charts for tomorrow's session. And speaking of tomorrow's session, what are you waiting for? Upper right-hand corner, if you'd like to learn more about all the details of our markets we trade, the strategies we use, the entries, the exit techniques that I use, I got a free pass for you in the upper right-hand corner. Come out and join me as a guest and learn more of the details of the strategy we use every day in our trade room. And don't forget, guys, if you have any questions, right, you can always post those questions in the comment section below, all right? Let's jump right in here for tonight's newsletter. Tomorrow, what's happening tomorrow? Well, of course, in case you haven't been paying attention, one of my favorite days of the year, right, we, of course, have the summer equinox, right, or the summer solstice, or there's a few other ways to describe it, right, the longest day of the year. I'll tell you, one of the things on my bucket list, right, is to go see that sunrise at the Pantheon, right, where, of course, all those, well, Google it, right? Google summer solstice and you'll see all about it, right? Longest day, right? Longest day of the year. And of course, what's the opposite, right? The winter solstice, December 21st, right? Winter solstice is the shortest day of the year. Question for you, what's your favorite day? What do you think? Is it the longest day of the year or is it the shortest day of the year? I have to say, my favorite day of the year is winter solstice because it's the shortest day of the year. But I'm kind of a perma optimist, right? And I always like the fact that I know that everything gets better from there, right? Summer solstice kind of has a little bit of a deflating quality to it, right? It's like, ah, boy, we're all downhill from now, right? The days get shorter from here. All right, kidding around with you guys though. But again, today being the longest day of the year, what's your favorite, right? Are you a glass? What are you? Are you a summer solstice guy or gal? Or are you a winter solstice? My favorite's winter because again, days only get better. What's yours? Leave me a comment right in the comment section below. Now that I got that out of the way, it is on my bucket list. Someday I'll make the trip out there. Let's see. Tomorrow is Friday, June the 22nd. What do we have here? Well, of course, we got news tomorrow at 9:45. Right, that's the only news we have tomorrow. On top of that news, we also have the OPEC meeting tomorrow morning. Okay, so if you're trading oil, you really got to be careful tomorrow. Tomorrow is most likely going to be nothing more than a bunch of news releases, a bunch of news headlines. I'll be keeping my eyes and ears open tomorrow morning. We're probably going to see a bunch of ranges, and then at some point tomorrow, hopefully we're going to get some breaking news, some leaked headline that so-and-so said this, and Russia's going to do that, and Iran's going to do this, right? No, Saudi Arabia's not going to do that, right? We'll hear something tomorrow out of that OPEC. Right, I've got a couple of resources that I give to my clients, right, for real-time news. So be keeping our eyes open for that, or keeping our ears open for that tomorrow morning. So expect to see some ranges, but expect to see, again, at some point we're probably going to get a break, tomorrow. At some point tomorrow, once they kind of make the official announcement of what they're thinking around that OPEC meeting. The rumor has it they're going to be increasing production tomorrow. And what that will probably do is it'll probably make the price go lower first, rope everybody in and then run back up. So watch for that job boning tomorrow off the OPEC meeting. What else tomorrow? What else do we have tomorrow here? We also have, of course, the end of the week. So, of course, end of the week, tomorrow is a summer Friday, right? Now, Fridays are always going to be early in, early out. What you want to remember is the window of opportunity for good price action is smaller on a Friday, right? Now, a lot of times, a summertime Friday, the window is even smaller. Now, hopefully I'm wrong about this tomorrow, right? Hopefully I'm wrong. But, typically, though, the months of June, July, and August, those Fridays are going to be a little bit shorter than normal. Okay, so just be aware of that. And what that means is where we are usually okay to trade until 11 o'clock, keep your eyes on that 10:30 time frame tomorrow and watch and see how the price action works. Okay, if we start seeing the market significantly slow down, 10:30, 10:45, that's going to be your cue, right, to cut it. So smaller window of opportunity. What else did we talk about, right, for a Friday? Well, I'm not sure if you guys saw this, but we have a lot of prior week open, high, low, close levels on the radar here today. At the end of the week, I start watching last week's open, high, low, and close, with the most important levels being the high, low, and close levels, right? The opening level's not that important. The high, low, close levels, those are going to be important for tomorrow. So what you'll see me do tonight is I got a bunch to follow here for tomorrow, but those levels will be used as support and resistance. They can also be used as price magnets for targets, right? And you'll see how I use that here in just a moment. So don't forget, guys, tomorrow morning with the PMI composite flash, that's a inflation number, right? Purchasing manager, right? Inflation number. Inflation, of course, has to do with the dollar, right? Euro, gold. So watch those two markets, right? 9:45, 10 a.m. tomorrow morning. Watch for the big 10 o'clock shock around euro and gold. Watch oil, right? Throughout the session tomorrow morning. Again, if I had to guess, I would say oil would probably be the most difficult tomorrow. But, every time I try to guess, who knows, right? I always say, go out every day, give it your best shot, be optimistic, but be realistic, follow your plan, because you never know what each day is going to bring. But again, I would expect at some point tomorrow we're going to hear about that announcement from OPEC. It'll probably lead to initial sell-off, but I would imagine that sell-off will probably rebound right back where it came from, because they're talking about increasing production, which The obvious result would be price goes lower, but it's never the obvious result, right? It's always the opposite. So be watching for that dip down, the buy back up. We'll talk about that in a moment. Again, early in, early out, right? Small window on a summertime Friday. I don't want to say you can't trade tomorrow. A lot of rookies will say, well, I heard you can't trade Mondays and come on. No. Every day has opportunity, right? We know where, we know when, we're just going to wait for it. Right, and sometimes Fridays can be a little bit slow and sluggish, right? So be there early tomorrow morning, right? And get out of there early, right? Enjoy the summertime weekend. And then don't forget those prior week open, high, low, close levels. They're magnets, they're targets, right? They're support and resistance. And we'll see a bunch of those today on the charts here for tonight's newsletter. All right, guys, we're looking great here. Let's jump into some charts here for us. And let's see what we got to work with for a summertime Friday session. First of all, we're going to go crude oil, S&P, Nasdaq, gold, and then why don't we wrap up on the euro tonight, and we'll get you guys out of here early. Crude is bullish and trading back inside the range from yesterday, which tells me to look for buying opportunities with seller failures at the low and selling opportunities using buyer failures at the high tomorrow morning. Well, we talked about this last night on the newsletter, didn't we, right? We had that trading range, right? We had that bull bias, and we knew we were going to try to go down and back up. Now, did I know the market would go this far down? Oh, of course not, right? There was no way to tell that we'd see that much strength going lower, but like I mentioned last night, right? One try, two try, strength, pull back, right, back up in. If you didn't watch last night's newsletter, right, just watch the next one after this video is done. Stay to the end of this video, and then last night's newsletter will play automatically after this video comes out from my YouTube channel. And so so we saw that one try, two try, failure, strength, pull back, right back in, and now here we are back up into that trading range. Okay, so here we are again. We are pretty much in the same exact spot we found ourselves in yesterday's newsletter. We have a bullish move higher. We're inside of a trading range. And so the goal is pretty much the same as we had yesterday. Now, again, with OPEC tomorrow morning, keep your head on straight. Don't do anything crazy. Tomorrow's probably not the day to go increasing position sizes, moving from simulated trading to live trading, or, adding on new patterns. Probably not be the day to do that tomorrow. But as far as your proven strategy, absolutely, we'll look at that tomorrow. So we have a strong move up into a trading range. It's the same range that we had earlier on in the week. What I'm looking for is I want to go lower and buy below the low of that range, Just like we're in the range here, we went lower and looking to buy below that range. I'm going to do that by using what I call the two-try rule. And you can see a great example right here. So we go down, I'm looking for a breakdown. The stronger the better, The stronger the better. Because I want to get this sucker way down underneath that range so we have all kinds of space to make some money as it goes back higher, If we just go down then try to get back up, there's not much space to go back up, But if I can go down, and then back up, yeah, now we're talking, Because now we've got a lot more space. And open space means profit, and profitable opportunities mean a lot more people involved, and that of course helps the self-fulfilling prophecy. So I want to see it go below that range. Now when it goes below that range, just like we saw just this morning, what will happen is the moving average will now come over. And when that moving average comes over, what's going to happen is sellers are going to try to sell it. They're going to try to sell the pullback to that moving average. It's a range, though. It's not a trend. This is not a bearish trend. It's a bullish trend into a range. So the odds are not in favor of those sellers. But I'm going to let them try to sell, I'm not going to try to buy it. I'm going to let them try to sell because now we know where their stops are, Now we know where their stops are. And once we see the sellers take the bait, just like we saw back here, one try, back to the moving average, bears try to sell it. Now we know where their stops are. So now we can look and we can be a buyer into those stops. Okay. Now, what will happen is, let's go back in time real quick. Okay. So now we see the sellers try once. We see them try twice. That's why I call it the two-try rule. There are lots of other ways we use the two-try rule. The next step is I want to see it trigger the entry, and then moving average comes over, and we look for the entry to buy long from there. Okay, so I call this the two-try. And again, this is the exact same strategy from last night. It worked today. It'll probably work again tomorrow, right? It almost always works. Nothing's perfect. But we see, of course, the one-try, two-try, right, into a failure. That failure leads to strength. That strength leads to a pullback, right? We go back into that range, right? We go one try, two try, failure, strength, strength, pullback, and then back up into that range. Okay. Now, this is on a much slower time frame, and I'm going to use a much faster time frame when I'm actually taking these patterns. If you'd like to see examples of how I use a faster time frame, right, to use these same patterns, I got a free trading course in the upper right-hand corner. Right? If you want to see more examples, right, of how these patterns look, right, on a chart, or if you want to learn more about the markets I trade, the time frames I use, right, the different technical analysis tricks I use, grab that free trading class. Okay, pause the video, not to worry, I'll be here when you come back, right? The goal is to give you kind of a cheat sheet, right? To give you a lot more detail about this strategy. That way, when you see me every evening on this newsletter, you can follow right along with me. Because I realize a lot of you guys are probably brand new here tonight, seeing this for the first time. All right, so grab that free trading course, upper right-hand corner, right? And we'll keep going here, right? So I'll see you on that free trading class. So one try, two try, failure, strength, pull back and back in. Now, what if we go higher here, right? This is always a tough part. Okay, as we go higher here, we start to run into resistance. Let's not forget, right? Again, we talked about this last night on the newsletter, right? Last night it was a spike and channel pattern, and I was looking for it down around the low of that channel. It broke a little bit lower than I thought, right? And again, it doesn't matter, right? Who cares? Now we have these highs down to that low. So as you can see, as we go higher here, we're running into that. Right, we're running into resistance up there. So I got to be really careful, right? I got to be really careful here trying to buy high on this chart. So ultimately, there are a couple options. Okay, what I want is, here's the ideal. What I want is, I want this. I want one try, two try, failure, strength, pull back down. Now, unlike the buy side, right? On the buy side, it's one try, two try, failure, strength, pullback. Okay, I can buy all those, right? Because the market's bullish. But if we try to sell, right? Remember, the momentum is bullish right now. If I'm trying to sell, right, when the market is bullish, I can't quite take the failure, right? The failure pattern isn't going to be as reliable. Okay, so that's not what I'm looking for here to sell. Now, if the market was completely sideways and there was no bullish bias, then yes, I could take that failure as well. Does that make sense? Right? But because the momentum is strong to the upside right now, I got to respect that momentum. I don't want to fight that momentum. So what I'll do is I'll wait for it to slam back lower. I'm not going to want to sell the middle, right? We want to stay away from the middle of a range. Buy low, sell high, avoid that middle. I'll stay away from the middle, and my focus will be to sell as close to the high, right, of that range as possible. So let's just say, for example, right, we see a one try, two try failure, right? Well, at this point now, I want nothing to do with selling down here. I've got to now wait and grab that pullback, right, back up at that high. Does that make sense, right? So you're trying to sell off the high, trying to buy off the low, trying to stay the heck away from that middle. All right, so as we go, one try, two try, failure, back in, right? Same strategy we talked about earlier. One try, two try, failure, strength, get that moving average over, right? Selling up near the high of that range. Okay, make sense? Okay, again, no failure going against the trend. Okay, now, there's also something else I'm watching here for tomorrow as well, and that is the strength of a possible breakout. Like, for example, let's just say we see a real strong break higher. If we see a strong break higher, look what's above us, the prior week high. Remember we talked about that earlier, right? Prior week levels become what? Targets. Okay, so if we see a really strong move higher, the odds are pretty good that the next pullback, we're going to be able to buy that next pullback. Okay, and what will probably happen is it'll probably be a relatively sharp pullback. And what I'm looking for is, I'm specifically looking for a small 1-2 failure, right, on a faster time frame. So again, remember, this is very important. It's going to be a real strong move higher, right? It's going to be a real strong move higher. And the reason I can do this is because we're going with the momentum of the market, right? I would have never wanted to do that down here. That makes sense, right? Because the market was bullish going into it, right? So remember, you gotta understand the bull versus the bear side here. Market's bullish. We go strong move up. Moving average comes over. Down, 1, 2, run. Okay, and my goal is up that prior week high. Then I'm looking for 1 try, 2 try, failure, right? Selling it back down into that range. Okay, one last thing here, guys. How do we break out of this range? Like I said yesterday, how quickly time flies, right? Like I said 10 minutes ago, sorry, right? Tomorrow, OPEC meeting. Okay, so we could see tomorrow could be a $5 move on oil. I'm not kidding. Okay, it could be. Probably not. Probably not. We've been hearing a lot of rumors already, so I'm sure a lot of this market is already priced in, right? But I'm telling you, tomorrow could be a really, really big day. There's potential. Not probable, but possible. Okay, now what would it look like? Well, first, it's going to have to go strength, pullback, strength. Okay, I call this a 1, 2, 3 move, a 1, 2, 3 breakout, or you probably have heard me say a 1, 2, 3 reversal, right? Strong move up, we see a strong move out, we pull back to the moving average, and instead of failing and running back in, we hold, and here's the key, we explode. Right? It's got to be explosive. This move higher here has to feel like we're never coming back to 66, right? It literally has to feel like everyone on the planet is buying oil right now, okay? That's what it has to feel like, okay? And if we do get that strength, pullback strength, then we go out and we find a new channel. I'm going to find a new channel by drawing off these 2 highs, right? And then bring it down to that low, and I'm looking for a buy off of that low. All right, again, got to be strong, right? Got to be strong. This is not drawn to scale. It just has to show me a 1, pull back, 2 obvious legs. Second leg is very strong. Okay, got to see proof. And you can see it back here, right? There was a strong move down, very strong move down, but the second leg didn't go anywhere, right? That's the difference, right? It's okay if we see a strong move up. But that second leg is probably going to sputter out here, right, and run back down to that low. I want to see it, bam, right, big strong move up, find that new channel, and we're good to go. All right, guys, let's keep moving. I'm already a little bit late into this video right now, so I want to keep you guys here all night. Let's keep going. How about some S&P? S&P is bearish in what appears to be a spike in range pattern, possibly a spike in channel. No matter which pattern we have, though, the bears definitely have control. The momentum is inside of the bears, but it's easy to see they aren't happy with buying new lows. With selling new lows. Because every time we see a new lower low, what do we see? We see a big bounce higher, right? So my plan is to look for selling opportunities, but only after a nice deep pullback up to resistance levels, right, tomorrow morning. All right, now again, you can see that prior week low up there, right, 27.65 half. That's going to be a big potential magnet there. Now, it looks more like a spike in range than a spike in channel, right? We get a strong move down. We go low, we go up, we go low, we go up, we go low. What do you see? Yeah, double bottom, double top. Okay? Literally walk yourself through that. Okay? Really, you knew you had a range as soon as you saw that low right there. Right? Because you had a strong move down. Anytime we see a strong move down, what do we expect, guys? We talk about this all the time. We expect to see a 2-legged move and a retest of that low. Then what? Do we continue or do we bounce? We bounced. When we bounce, it becomes a range, right? If we continue, it becomes a spike in channel, right? Remember this from earlier on in the week? This is why it's so important to tune in every evening. That way you continue to refine your skills, and that way you can finish my sentences. Okay, let's keep going. So now we know we have what I think to be a spike in range. Okay, where are we? Where are we? We're at the low of the range. Okay, now we talked about this on oil. What's the plan for a range? The plan is to buy low. The plan is to sell high. And the plan is to what? Yeah, avoid the middle. Right? Don't fiddle with the middle, as Mama says. Right? So we want to buy low. And where are we right now? We're low. right? So what are we doing here? We want to be a buyer. But the problem is, look at the trend, right? Look left. Probably not a good idea to fight the momentum of the market. So you can look for a buy here right now, but usually trying to go against the trend is going to have what? It's going to have lower probabilities, right? And probability is the most important factor when it comes to a successful trading career, because we expect to take thousands of trades in our careers, right? Hopefully you have a long-term career because you're learning the right way to do this with me every night in the newsletter, right? And hopefully we have long-term careers. We want to make sure our winning percentages are as high as possible. So we're down the lows of this range right now. Right, we got our one try, we got our two try. Sure, we can look for the buy going back up, right? But a lot more reliable pattern now is going to be to go up, one try, two try. You guessed it, right? Failure, strength, strength into pullback, right? Pullback, coming back down again, right? Moving average comes over, right? It's a one try, right? One try for the bulls, two tries for the bulls. Now we know the stops are, right? Stops get run once we crack below that swing. That leads to bearish strength. We don't sell that bearish strength, but that brings the moving average over, and now I can sell on the pullback. Remember, we want to sell up near the highs of that range, right? And again, if you'd like to see examples of those patterns on faster time frames and how they're actually used, right? Upper right-hand corner, grab that free trading course, okay? Learn more about the entire trading strategy. Again, pause the video if you have to, go grab that free trading course. All right, guys? So what's another option here right now? Another option would be obviously one try, two try, strength, pullback, back in, right? Because the market is bearish, right? We're not looking for the failure. I'm looking for that strength, wait to see it go higher, right? And then buy the pullback. Okay, another option there, right? If you don't want to wait for the sell. One try, two try, failure, strength, pullback, back down in, right? Stay away, stay away, stay away from that middle. Okay, now, real quick, zoom out, look where we are. It's pretty easy to tell these bears are trying to get back down to that 27.35 three-quarter area, we'll call it, right? S&P moves in quarter points, right? So what else can we have? What else can we use here right now? Well, there's potential here. This could be a little bit wider spike and channel. Yeah, maybe it is, right? Toss a little midline on here. You know, I think it fits better as a narrower spike and channel, right? You know, toss a little midline on here. Yeah, that seems to make sense. Okay, so what would that look like? Well, we have to first make sure we see proof that we're getting below this range. So 1, 2 on strength, right? I got to see some strength here. I don't have enough yet. I don't feel confident selling as it goes lower because it might just rope me right in. One try, two try, and back up in again, right? You know how that goes. We saw an example of that on oil today, okay? So we got to go one try, two try failure, right? And when that happens, right, once we get that one try, two try failure, now we know moving average comes over. Now we know they're headed for, right? Now we know they're trying to get down to that 35, okay? Now I'm looking for trap, buyer failure, pull back, and go, right? Trap pattern up above that high. Come by on the top of that channel. Again, this is all the prerequisite for this is that strong one, two-legged move. Okay, remember, okay? Then we go up, failure pattern, okay, into a pullback pattern. Okay, so trap high into buyer failure, right? Two try rule about the moving average, strong move down into the pullback. And again, if you want to see examples of those patterns, trap patterns, right, grab that free class in the upper right-hand corner. All right, guys? So that's if we get some strength going lower here. Now, how do we reverse? What does a reversal look like? Strength, pullback, strength. I have no problem being a buyer. I don't care what direction I trade or really what market I trade. A chart is a chart is a chart is a chart. Okay, but I do have to wait to see proof. Momentum is going lower, right? If I tried to buy a market every time it went higher on strength, I'd have no money left, right? So you got to see it go up, hold that pullback again, and explode, right? It's got to be strength above, pullback, and explode. It has to look like these buyers have taken full control of the market. Okay, new higher high, draw the channel, find that buy off the low of that channel. Usually it's a failure, right, below the moving average. Okay, at that point now, the buyers, they want to go back up to retest that 27.85 area. All right, guys, pretty easy there on the S&P. Just got to wait for some more proof. Now, how about the Nasdaq? Right, the Nasdaq's in a very similar situation now to the S&P. The Nasdaq is bearish, but a recent retest of this morning's low doesn't give me enough proof that this market wants to keep pushing lower. So my plan is to wait for more information. If we run higher, this becomes a range. But if it keeps running lower, right, it'll turn into a spike in channel. Okay, if we see the pop higher, then I'm focused on selling opportunities using buyer failures. Okay, if we see it go lower, if it turns into a spike in channel, then my focus is selling just above the channel, right, using traps. So here's a very interesting scenario here. Okay, here we have, and I want to go back to the S&P just real quick. I know I'm running late here, but I want to make sure you understand the difference here. Okay, now follow the bouncing ball. Strong move down. We pull back, we retest the low, and we bounce before we go lower again. Okay, now mark them up. 1, 2, 1, 2. That's a range. Okay, the S&P, we know we have a range. Okay, now watch closely here. Strong move down. It never pulls back to the moving average, so you don't count that. Okay, if you've watched my newsletter before, you know that the key is it's got to come back and hit that moving average. Okay, don't ask me why they do that, but that's usually the difference between first leg and second leg. Okay, so we go lower, right? We go higher. We go lower. We're still going lower, right? You see how we're still going lower? Did we bounce higher yet? We haven't bounced higher yet. Okay, so now count it up. Count it. We've got one bottom, one high. Do you see a double top? I don't. Well, even if you did, let's just say, okay, that's a top. Sure, I'll give that to you, right? Where's my double bottom? Exactly. There is no double bottom yet. Okay, and as much as I want to say the Nasdaq is just like the S&P, it's not. It's not. Okay, now if we go higher, down, up, down, up. Ooh, right? Now we have a double bottom. Okay, and now this becomes a range. Remember, anytime we have a bear market that bounces and then double bottoms, what happens? We mark that up. We mark this, the highest point of the pullback between, right? That becomes our range. I know this is repeating myself from earlier this week, but many of you guys weren't here. 1 try, 2 try, failure, strength, pull back, back down in, right? Okay, so we have now strong move down, pull back, we're trying to go through. If we bounce, this becomes a range, and what do? 1 try, 2 try, failure, strength, pull back, and back down, right? Okay? Or do we keep going lower, right? Do we keep on running lower? Okay, now this looks like a spike in channel here, doesn't it? Right? So if we keep going lower here, right, we keep going lower, what's my goal then? Well, I know where they're trying to go, right? They're trying to go down to this prior week low. And on top of that, we get the big measured move, right? That'll be a big target. So I have to be aware that as we go lower here, right, as we go lower, I got to be aware of my surroundings, and I don't want to be, right, I don't want to be selling too low. Okay, so what do? Well, one of the tricks you'll learn in my intermediate class is that anytime, right, we have a spike in channel, I like to look for traps. Traps into failures, failures into strength, strength into pullbacks, and pullbacks back down, right? A trap pattern goes above a prior swing, right, in a bear. Okay, then of course we have buyer failure, 2 try rule, and then strong move down, don't chase after it, right, sell the retracement. And again, the moving average will usually look, right, like that, right? Okay, so as we go lower here, right, as we go lower, trap, failure, back down. Okay, now we may see this 1 try, 2 try, and launch. Okay, that's going to be your cue that this is a range. Okay, we're looking for to keep going, right? Next few hours, show me these bears, right, are walking their way down to that prior week low. Don't chase it. Wait for those sells. Again, trap, failure, strength, pull back, and back down we go. Okay? If this thing runs, right, let's just say, for example, we see it just literally run. If this thing runs like a bat out of hell, right, we want to look for that, focus on buying it down near the low of that range, right? Don't chase after it. Okay, but if we see a nice little, right, nice little trap back down, perfect, we know where we're going, right? But if this thing just runs, right, you'll know it. You'll know it. Big, strong candles, right? You won't see anything stop it, right? That's your cue. We're going back into that range now, right? And again, try to buy it, right, on the way after the high of that range. All right? So sellers want to get down to that prior week low. Buyers, prior week high. Easy targets for tomorrow, right? All we need now is to see what we get. My gut tells me we're probably going to go range bound, right? But don't trust my gut. Don't trust your gut either. Don't trust anybody else's gut, especially meeting someone's gut on Twitter, right? Trust your charts. Okay? Price action is king, right? Price action is the key here. All right, let's keep going. How about some gold right now? We got gold. We'll wrap up on the euro. Gold is bullish after the sellers tried, right, or sellers failed, and buyers took control shortly after the opening bell in the U.S. session this morning. And knowing that we start the week in a range, I'm looking for buying opportunities now at the low of this channel with the target going back up to the range highs tomorrow morning. I think the best thing on the gold right now is get a little bit of a bird's eye view here. We've had this market kind of stumbling lower here for quite some time, right? Strong move down, goes into a range. Strong move down, goes into a range. Strong move down, kind of a range there. Not big enough to really make anything work with it. Okay? Now, as we wrap up the week, I'm watching those prior week levels, right? Prior week low, prior week close. You'll notice, right, those are way too convenient. Back at the top of the range, and back towards, right, the vertex of that triangle. So if these bulls can hold this sucker higher here tomorrow, right, those are definitely going to be some easy targets for us, right? Not to mention the fact that we're coming out of this range, right? And as I mentioned last night, we knew we were looking for, right, that one try, two try failure by the pullback, right? That was the plan today, and again, you can see here working out pretty well. Well, now I'm connecting this, right? We're trying to go back into that range, right? We're trying to grab a measured move. We're trying to grab a prior week low. The prior week low is definitely where my mind is at right now. I've got this new channel, right? As I always say, right? When the market turns directions, right? You grab that high, bring it down to that low, find that channel, right? And here we are now, right? Here we are now at the low of that channel. Okay, so looking for a buying opportunity here, right? I want to be a buyer. Okay, what can I do? Well, I'm below the moving average. So anytime I'm below the moving average and I want to be a buyer, I'm looking ultimately for one of two patterns. One would be a trap low, right, below this prior swing, right? So a trap low. And then, of course, you know what else, right? Trap low into a two-try failure. That two-try failure into strength. Strength, of course, now into a pullback. And a pullback going back up to retest that high. Right? So it's going to be trap pattern, right? Below that prior low. It's a failure, right? Two-try failure, one-try, two-try failure. Okay, into a pullback pattern. Again, if you want to learn more, if you want to see more examples of these patterns, right, grab that free class in the upper right-hand corner, right? You won't be disappointed about that. I can promise you that. Okay, so again, looking for that pull back a little bit further, right, for a trap, or maybe we just see it like this. 1, 2, failure, strength, pull back, right, up from there, right? Or maybe it goes even further, right? Strong move down. Okay, we got measured move down here, strong move down. Maybe it goes even further, right? Strong move down. Bears try to sell it. They fail. Strength, moving average comes over, right? Pull back and back up into that range. Okay? Now, really, the only thing right now that would change my direction on this would be if we get back down to retest that low. I shouldn't say that. If we see a strength, pullback strength, I'm going to have to give it back to the bears. And that goes for anything, right? Anytime we see a strength, pullback strength, right, it either reverses the direction or it breaks out of a range, right? Makes sense? So again, if we end up back at that low, if we retest that low, you got to give the bears some kudos on that and give them control. But strength, pullback strength, right? Oh boy, it's going to be tough to sell down here because you got that low, right? You got that range. It's just, yeah. If it was easy, they wouldn't have gotten run over by it right there, right? So just be careful as the market goes lower, right? So 1 try, 2 try, failure strength, pull back up. Okay, now at this point now, if we can get this market running higher here, remember, focus on buying down at that low, right? Focus on buying down around that low. That's your job. Okay, you don't want to try buying up around here, or if we see this thing really running hot, right, up into that high, okay, what's probably going to happen is we're probably going to finish the day around that prior week high or prior week close. So if we do run hot, right, if we do run hot and we get up to that prior week close, you're buying those pullbacks, right? It'll probably end up going up, range bound, and then 1 try, 2 try, back up again, right? So watch those prior week levels acting as magnets, right? First acting as targets, and then creating a price magnet and getting stuck right around those levels. But again, as it goes up, focus on buying as low as possible. That way there's no question about whether or not you're buying into resistance. And if it starts going sideways around those levels, right, you know your job, right? Wait for the range. If it starts going sideways up here, remember, we see a double top, trading range, 1 try, 2 try, buy below the range low. But try to buy as low as you can tomorrow as the price runs higher. That way, right, you're not chasing after the move going higher here. All right, wrapping up tonight in the euro. The euro is range bound and trading at the high of the range this evening. This is, by the way, this is an adjusted range here tonight. Okay, they're always doing that, by the way, right? You know, you'll have markets that will be range bound, but then you'll see, you know, tomorrow will form a little bit slightly different range, right? Very rarely do we get more than 2 or 3 days, you know, consecutively where the same range can be used. Just so you know, right? So you're always keeping an eye out for that potential new range. So again, new range, right? You know, almost the same range, but slightly different. If you watched last night's newsletter, you know what I'm talking about, right? And of course, with the high of that range, which tells me now to look for selling opportunities using buyer failures on the way back down, right, to retest the low of that range. So I've got my range. Right, we go down, we go up, we go down, we go up, we go down. Yeah, count them. Right, 1, 2, 1, 2. It's a range. Okay. Now this looks like there's a bear bias to it, but there really wasn't. It was pretty much range bound all week. We just came down, and so you know, again, there was a bear bias to it earlier on in the week, but as I mentioned last night, it was pretty much balanced. So we go lower. Right, we go lower here now. The amount of the breakdown, right, so we go below the range. The amount of the breakdown, right, is the amount of the break up, and you can see they're fitting right in like a glove, right? So pendulum swing, as we call it, right? Balance in the middle. We swing low, we swing high, right? You can see they're finding resistance right where that pendulum swing would put it. So all is good, right? All is good in the world of the euro. Now, with that, it's easy to see, right? 1 try, 2 try, failure, strength, pull back, right? Back up. Okay, well now, here we go. We've got this beautiful trend line here, right? This beautiful trend line. Okay, now that trend line gives me a great opportunity here now. Okay, because now what I can do is I can incorporate, again, we still want to use that 2 try rule, right? I can incorporate now that support trend line as resistance. Okay, now what I like to do is I like to look for the 2 try rule after we get below this support. Okay, in other words, I want to see us go up, hit that, right? Hit that trend line. Okay, that will give us what we call a 2-legged pullback. Then I can look for that failure into strength, strength into pullback, and pullback back down. right? So of course I want to see it get below the trend line, use the trend line as resistance. That now gives me my 2 try, failure, strength. Again, don't chase after it, right? And we're running back down into that range, right? So 2-legged pullback, buyer failure, right? Seller pullback, right, on the way back lower. And again, if you want to see more examples of these patterns on real charts, right, learn a lot more deeper dive into these patterns, right, grab that free trading course in the upper right-hand corner, right? So 1 try, 2 try, failure, back down in. 1 try, 2 try, failure, strength, pullback, and back up in. Remember, stay away from the middle, right? Buy them lows, selling them highs, focus on failures, and remember to use that 2 try rule. Okay? Now, once again, what does a breakout look like? Strength, pullback, strength, right? So, hey, let's just say tomorrow morning we come in, we're seeing it hot, right? Running hot as it goes higher. Fine, right? As long as we see explosive move going higher, it's fine by me. Okay, we'll draw out that new channel, find that new channel, and we'll buy the low of that channel, right? It requires some patience. It requires some discipline, right? But again, it'd be worth it. Okay, you don't want to take too many trades. Less is more when it comes to trading. Wait patiently, especially a market that's been as range bound as this one. All right, guys. Now, don't forget tomorrow, OPEC meeting, right? OPEC meeting tomorrow morning. Careful on oil. Early in, early out, smaller window of opportunity, right? We talked about this already. And don't forget to grab your copy of that free trading course that we can learn more about everything we do here at School of Trade. How about a free pass? How about a free trial? I get a great free trial. I'll shoot you a free pass. Come out and join me in our trade room to learn more about our trading strategies. And of course, don't forget, we've got beginner, intermediate, and advanced membership classes. That way you can learn our strategy and then come execute that strategy every day with me in our trade room. To learn more, call me in the office. I'll be here for the rest of the evening tonight. I'll be here all day tomorrow. And of course, this weekend, it'll forward to my cell phone. If you have any questions, you can always hit me up on live support, or you can type those questions in the comment section below. Be careful out there tomorrow, a summertime Friday. And again, what's your favorite? Summer solstice, winter solstice? Are you a long day or it only gets better from here type of guy or gal? I'd love to hear from you in the comment section below. And as always, have a fantastic, fantastic weekend. If I don't see you guys tomorrow morning in the trade room, until next time, adios amigos. Bye-bye for now.